Good morning, good afternoon, and good evening, folks, depending on whatever and in the world you are. I am based in London, so it is good afternoon for me. So I hope all is well and then you guys are keeping safe. In today's masterclass, we will be covering how to trade stocks. So we'll be really digging deep on this particular topic and really looking at some fundamentals that really drive the stock prices to the upside or perhaps to the downside. We will also look at several other factors which also impact stock prices as well. And of course, we will look at the opportunities which may be on the horizon in terms of the most popular stock. So just a bit about introduction about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience during this time period. I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader for Bank of America. Currently, all the research that you see on a daily basis on AvaTrade is done by myself. And I hope that you are taking full advantage of all of that. Now, as always, it is important for us to go through this disclaimer and risk warnings. Anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, the most important thing, if you guys do wanted to contact and wanted to engage yourself in a conversation, the Twitter handles are right in front of you. This is for myself and this is for AvaTrade. In terms of a YouTube, the channel handles are here as well. And let me just mention that we do post on a daily basis on our YouTube account on AvaTrade, where you see the daily fundamentals in terms of a live and of course the technical analysis as well. Now, the agenda for today, which is the most important thing. So what we will be doing in this particular session, we'll be measuring indices, and then afterwards we'll be measuring sectors, seeing which sector is really going to have the most amount of momentum in the coming days, or what exactly the momentum is currently in those stocks, and we'll be able to do that by measuring the indices. And then we will of course be looking at several different stocks which are still very much under COVID influence, and we are still seeing rally in those stocks, and they represent a wide variety of sectors such as consumer discretionary, consumer retail, banking, energy, so many different, all the 11 sectors that pretty much are covered by these stocks, the one which are in front of you. So we'll be looking at those ones. And now, before I change my screen, I just kind of wanted to ask you guys in a series of 3 questions. I wanted to ask you guys, the first question is that how long you guys have been trading for. So please say yes if you have been trading under a year. Okay, so we have few people who have been trading under a year, so not many of the new names are here. And then some really good questions are coming. Please help me, I am new in trading, please help. For sure, this is what exactly these webinars are for, and then this is really gives you that sort of an information. Now please say yes if you have been trading under 2 years. Wow, okay, so there are people who are actually completely new to the world of trading, so that is really exciting because there has been never a good time to get involved into the market as compared to now, and especially last year was very, very good. Now, the last question that I kind of wanted to ask you guys is that please say yes if you have been trading over 2 years. Right. Okay. So by the look of the answers to my questions, the one that I've asked, it seems like that the most of the traders are very much new into the market, and there are very little experts in relation to that. Most people have been trading between a year and two. So this really kind of helps me to to choose the right terminology in terms of our webinar that we are holding, so that you guys don't get confused in relation to the complex terminologies. And then if there is something which you don't understand, I always encourage you guys to pop questions straight away in the chat box, because as we go along, we will be doing that. And I'm still seeing, a lot of people are saying that I am new in the market, would like to learn more. So for sure, again, we really wanted to help you guys, and this is why exactly we are holding these webinars. So every single Wednesday at this time, you guys will see us holding these webinars. So this is really your opportunity to learn more in relation to that. So now I'm going to switch some platform, and we are going to go towards the major indices to measure the strength of those indices, and really look at from that perspective that what exactly is going on with them. And then we will look into stocks from there onwards. So let me do that. And now if you guys should be able to see my MT4 platform. Today we will be looking at MT4 platform and at AvaTrade's platform as well, where we will be looking at several different stocks and then really performing the technical analysis, and then really showing you guys the opportunity which are in the market. Now, let me just get a bit more serious on the subject, and then explain you the concept of the market, that when I measure the market, and then how I measure the market, if markets are overbought, if markets are oversold, what indicators, what strategies that I really use in order to measure the strength of the market. So that is what we are going to do. So are you guys ready? And then you guys need to make sure that you guys are paying full attention to this now, because we're I'm about to explain it to you guys how we are really going to measure the strength of the market. Now, as you know, all of you, that we have three different indices in the market. For the US market, we're really referring to, firstly, we have Dow Jones, which is as also classified on AvaTrade's platform as US 30. Then we have S&P 500 index, which is your US 500, and then NASDAQ. These are the three important stock indices in the United States, which everyone looks at, but everything is measured and benchmarked by the S&P 500 index. So the performance of the S&P 500 index really tells us that whether the market, how the market is performing overall. So on the S&P 500 index, what we're really looking at, you may be wondering what are these three lines. So this is your 200-day simple moving average. Why day? Because we are on a daily time frame, and then that's the way that we use it. And after that, we have a 100-day simple moving average, and finally your 50-day simple moving average. Now, the question which you may rightfully wanted to ask me, that Naeem, why do you want to use the simple day moving average, and why have you chosen to go with these particular numbers? Why not 51 and 52? The answer to that is that when it comes to institutions, from my background, when I have worked with institutions, it has always been about these important moving averages between institutional clients, and then they tend to buy, and then they tend to sell the market the moment the prices really come close to them. And the way that they really measure the market is that they see that how far the market is from its 200-day simple moving average. So in this case, the 200-day simple moving average is here. The price is really trading over here. So we can see that the price is clearly trading quite far from its 200-day simple moving average. And the last time we saw something similar where the price was trading that far from 200 simple moving average, we can say is that something similar was happening right over here at this particular junction. And what happened afterwards was that we saw a retracement in the stock prices, as you can see over here, and a similar scenario over here can really come as well. We could see some potential retracement in prices as well. The second thing that we do exactly is we see where the prices are trading with respect to the 100-day simple moving average and how far are they really. So in relation to the 100-day simple moving average, we can see that the price is still quite far. The last time the price came close to the 100-day simple moving average was fairly recently in early January, but price didn't really touch it and it moved back up. And the last time that the price was trading, that far from its 100-day simple moving average was obviously what was around this time when the price was really trading over here, and then the S&P, the 100-day simple moving average was here, and what we saw afterwards was obviously the price retracing and moving to the downside, just like how it happened over here. But the most important out of all of them is really the 50-day simple moving average, because this is the one that the market really pays quite a lot of attention to, and the price should not be trading too far from its 50-day simple moving average. Now you can see that the price has moved away quite far from its 50-day simple moving average. The last time we can think of this thing happening was right over here by circling over here. And then what happened afterwards was that the price started to fall back and it visited its 50-day simple moving average. So when the price, generally speaking, it moves this far from its 50-day simple moving average, we do know usually that the price is also going to have a retracement. So that means that the prices are actually overbought, or the stocks are overbought. And at the same time, what another important indicator to pay attention to is the RSI, which is the relative strength index over here. If the RSI, as you know, I mean, I'm not going to explain this in detail because I'm expecting that you guys already know this, is that when the RSI reaches 70, prices are overbought, and when the prices RSI reaches 30, that means prices are oversold. And when this happened, the price kind of was quite away from its 50-day simple moving average. The RSI was also indicating that the prices are going to move to the downside. As you can see, that this particular level was very much coincided with this particular level over here. So we saw the retracement in the prices. So a similar thing is really happening right now, as the prices are trading quite far from its 50-day simple moving average. The RSI is also trading near its overbought level. Obviously, this level is not as much overbought as over here. Over here, we were well above the 70. But at the same time, what is quite important for us to keep in mind is that the prices are trading quite far from, so there is still more strength left for this one. So out of the Dow Jones, S&P, the Nasdaq index, to summarize something again, the most important thing is that the traders and investors, they pay more attention to one important thing, which is the S&P 500 index. When they see that the S&P 500 index is overall trading to the upside, and then they know that the trend is really good, because now it is moving to the upside. But they begin to have some sort of a caution, and that they adopt caution in their trading as well when the price moves quite far from its 50-day simple moving average, and especially when the distance is very, very much with respect to its 200-day simple moving average, as you can see from here. Now, I'm not going to do the same thing with the rest of the other indices, because this particular webinar is not about trading indices. We do that in terms of when we do masterclass on that one. Now, in terms of measuring the sentiment, what I'm going to do is I'm going to give you an information on the market, which you won't be able to get it on the market for free. And this is why it is quite important for you guys to attend these webinars, because during these webinars, this is exactly what we do. We give you proprietary information which you don't get anywhere else. Now, when I look at give me 1 second. Okay. Okay. Just market breadth. I just wanted to show you guys something really cool over here, and then this really shows us that how the market is really performing with that aspect as well. All right, okay, so this is the one that we really need to pay attention to. Right now, over here you have, this is the column that we will be very much focused on. So let me just highlight that column. So we will be very much looking at the 200-day simple moving average right over here. And then remember, it is all percentage data that we are going to get. Over here, what we have is we have our indices, which we are very much going to be looking at. Now we will look at the two indices. Number one is the S&P, and then secondly is the Dow Jones. What we really kind of wanted to measure over here is that we know that the S&P is trading above its 200-day simple moving average and above its 50 and 100-day simple moving average. We want to measure how many stocks are actually also trading above these moving averages. This gives us a further indication which if the strength in the market is really strong or not. So we will just briefly have a look at that one, and then we will go on back to our MT4 and AvaTrade Go platform. So what we look at is, with respect to the Dow Jones, we can see that the 83% right over here, 83% of the Dow Jones stocks, which has 30 stocks in them, are trading above their 200-day simple moving average. So this confirms to me that the market is still very strong. Similarly, if we look at the 50-day simple moving average right over here, it also shows that the 73% of the stocks are trading above their 50-day simple moving average. Again, indicates that there's a lot of strength really coming into that. And then the second thing that we will really kind of look at is that S&P 500 index, when it comes to the S200 simple moving average, 86% of the stocks are trading above their 200 simple moving average, and 70% of the stocks are trading above their 50-day simple moving average. Again, we get this confirmation from here, which shows that the prices are the momentum that we have seen on the MT4 platform right over here. It is still strong, so the chances of this retracement are a little bit less, because market is still very much holding. More than 60 to 70% stocks are trading above the 50-day simple moving average. If the ratio was that the less than 50% of the stocks are trading below the or above the 50-day simple moving average, then we could clearly say at the time that, look, the market is going to see weakness. So right now, what we are very sure about this is that the market is not going to see any weakness, and the market is going to continue to move higher. Now, the top-down sector approach has been very much determined. We know that the overall market is very strong. There are a lot of stocks which are trading above the 50-day and 200-day simple moving averages. So we should be looking for trades to the upside. Now, what we're going to do now is we're going to focus on individual stocks, and we'll be looking at individual stocks and then really seeing that how the momentum is really performing in them. Now, in order to do that, I am going to flip my platform to AvaTrade. And then from AvaTrade Go, I'm sure that you guys have already know that over here you have your what do we call it, American stocks over here. And then now we are going to start looking at most of the stocks from here. Now, obviously, Alibaba is your e-commerce stock, and this is very much like how Amazon is working. This Alibaba is like that over in China. So what we got to do is we got to look at the opportunities on the daily time frame and then see where the price is trading. Now, again, over here, this purple line, which is over here, is your 50-day simple moving average. This one over here is 200-day simple moving average. As you can see, that the price is trading above the 50-day simple moving average. This confirms us that the momentum in Alibaba stock is kind of strong. We can see that the momentum is going to continue its journey to the upside, and we are really about to break out of this consolidation zone. This consolidation zone has been forming for a very long time. Now the prices are about to break to the upside. So what we want to do is we wanted to put stop losses below the 50-day simple moving average with respect to Alibaba. We wanted to continue to seek a price to the upside because we know the overall market is going to the upside. And then in terms of our resistance, in terms of our price target, what we really kind of wanted to focus over here is we wanted to bring our price target at its all-time high, which is going to be 318. So in terms of a risk to reward ratio, we are risking what, about less than $20, nearly $20, but over on the top side we have more than $50 to cover. So this trade kind of works quite well in from that perspective. So that is something that we kind of really need to keep in mind. I see that people, I think, are asking questions, so let me just quickly review some of the questions. Just reviewing, going through some of the questions over here. Okay, so finished course. Okay, I am new in the market. Could you please try to explain a little more on the entry and exit aspect of trading and what to look for before entering trade? Okay, so that is a very, very good question. So someone is asking me what to look for in terms of an entry and exit. Exactly what we're going to look at in terms of entry and exit is what we have talked about over here. So basically what we really look at is that how far the price is trading in terms of 50-day simple moving average. Now the best entry trades are just like how Alibaba trade is really happening. So basically I wanted to see that if the price is near its 50-day simple moving average, then yes, great. And then it is also about to break above the 200-day simple moving average, great. So this is my sort of entry criteria really. So other entry criteria for me is to look at the overall strength of the market and then trade in the direction of the overall strength of the market. I hope that kind of explain what I really mean by that. Please, sir, can I have your contact, please? I'm sorry, okay, if you wanted to have my contact, as I've mentioned to you earlier, in our over here. So just tweet to me over here under the handle which is there. So I'll be more than happy to come to come and reply to you whatever you need. And can I have the recording of this meeting? Yes, the recording will be uploaded afterwards. What about the incentive in USA? I don't know what about that. What do you mean by that, Mubarak, when you say incentive? Are you talking about the stimulus? Yeah, stimulus is going to be very, very positive. How is the purple index called? How is the index? Are you talking about purple index over here, Mihai, or are you talking about well, I think you were talking about the purple over here. So this is again your 50-day simple moving average. If that is what you are asking me, that is your 50-day simple moving average. How can you access the info about the indices strength? Mandy, again, we do this sort of information in our live webinars in order to access that sort of information. Don't stress too much. Just focus on the analysis the way that I've done. All right, okay, where is the video recording? It will be on our YouTube. The recording will be on our YouTube. What is the maximum leverage for a stock? Every stock has a different leverage, but they are usually on the platform, so you will see them. Okay, right. So now I'm going to continue because we have quite a lot of things to cover. So then the next one that we are really looking at is the Amazon stock. Again, very similar to what we have Alibaba. And on the daily time frame, what we're really looking at where the price is trading. So we can see that the price right now is trading at 33,269, and the price is also trading near the 50-day simple moving 200-day and 200-day simple moving average, as you can see. So what we are going to do from that perspective is we are going to put our stop losses below the 200-day simple moving average, and then we are going to go for the Amazon to move higher. And then how high we are expecting Amazon to move with respect to that, we want Amazon to really continue its journey to its all-time high. The all-time high was right over here, so this is going to become my resistance. So what I'm really expecting is I'm putting my stop losses just below that 3,202. Price is trading at 3,269, and I'm targeting 3,547. So that is the Amazon trade. Again, because the market has a lot of strength, we wanted to move to according to that strength. The next stock that we'll be focusing on is Apple. This is your tech stock. Obviously, they make iPhones and everything else. So I don't need to explain to you guys more about that. So with respect to Apple, what we're really looking at is that, okay, what is the price doing more recently? There's something wrong with the chart because they haven't corrected the chart after the stock split. So we will skip that. Bank of America. I will do Apple on a different platform just to show you. I think there's something wrong with it. They haven't corrected the stock price there. Okay, so again, Bank of America, this is very, very important financial stock. And as you can see, that the stock is very much in a strong momentum. Again, the importance of 50-day simple moving average. The great opportunity was really right around this point when the price was really coming near its 50-day simple moving average right over here. Because when the price came over here, what you would have done is put your stop losses just below the 50-day simple moving average, and then wait for the price to trade. And under these circumstances, the price really traded to the upside. So this is really, really positive. Now, what you could do is that there is still plenty of room left in terms of Bank of America. Now, what we got to do is we're going to go into even bigger time frame. We go into our weekly time frame to see where is the next resistance in terms what is the next target that we can really take in terms of Bank of America. So when we go onto the weekly time frame, from there we see that the next target that we can be really looking at in terms of Bank of America could be just right over here, which means the prices can really go all the way to 35. So that is the minimum target that we should be really looking at. But under the current circumstances, there is no trade because the trade was really when the price was trading near the 50-day simple moving average. So that trade is not there now. So we are not going to take any trade with respect to this one. So we're just going to pause this one and leave this one for the time being. With respect to Boeing, let's have a look at Boeing and see. This is a stock which is very much airline related. Obviously, we heard so many different news about COVID and then how things are improving. So there is a breakout trade happening with respect to Boeing without any doubt. So what you would want to do over here is, first of all, the breakout trade is like this. So right now the price is coming out of its, So price is coming out of this consolidation pattern. From here, what we are likely to see is the price is moving still to the upside. So how far we can really go? We can go right towards that December high, which we achieved before. That is 3,546. So where do you want to put your stop loss? You want to put your stop loss just over here. Let's say that 210 or maybe 204 near the 50-day simple moving average. This particular stock is highly likely to continue its journey to the upside. So Boeing still has a potential, massive potential, in fact, to move to the upside. So we'll be really very much be focused in terms of a Boeing, but for a long trade as the overall stock market will continue its journey to the upside. Now Chevron, this is your energy stock. Obviously, energy stocks have been performing quite well more recently because of a massive rally that we have seen in oil prices. Again, very important thing what is happening with respect to oil prices is that we are in a process of forming a triple top. What do I mean by that? First top being over here. The second top again is right over here. And the third top we are about to form right over here. The price is just about to come into this particular zone. So what you want to do under those circumstances is really you want the price to break above these particular zones. So I'm going to just readjust this trend line a little bit, not to the left, so like that. So there you go. So I just want basically what I want really now is price to break above this resistance line, and that will be the breakout trade in terms of Boeing. So what we'll be really looking at is that the moment the price breaks out of this one, so we'll be looking for a trade to move to the upside, and then we could possibly put our stop loss just near the 50-day simple moving average in terms of target on this particular trade. What we really kind of wanted to focus is the high that we have over here, and that high is at 121. So that is the price level that we've already very much focused on. So you would want to put your stop loss at 88. You want the price, you wanted to wait for the price to break above that 93 and 95 price level, and then from here what you really want is you want the prices to continue their journey to these particular price levels, which were where we were not too long ago, because this was formed in early 2020, in January 2020, so only last year. So price still has quite a lot of potential to move to the upside. This stock is still very much underwater, so we still have quite a lot of potential in relation to this one. Now we just had a data as well. Economic numbers have just come out. That was your retail sales number. They have come up very strong, and I think the equity market is really going to move quite high. Let me just exactly check how the numbers have come out, because the retail sales number was supposed to come today at 1:30 p.m., which came about 2 minutes ago. So let's see how those numbers have performed. Over in the numbers are extremely strong. As you can see, 5.9% is your core retail sales number, and then retail sales number is 5.3. So this really shows that the consumers are spending quite a lot, and this strong number is going to, like this weakness that we are seeing really on the back of this particular data doesn't really make sense at all, because the number is very strong. Let's see what's happening in the gold market as well. There you go. So the gold market makes it even more clear, because the number is so strong. We are seeing massive selling in gold prices, as you can see over here. So this particular price action, which is happening in S&P 500 index, is really some sort of algo is really triggering. But the price has visited this price level. I think the S&P 500 is very likely to move to the upside fairly quickly. In terms of Dow Jones, let me just see what exactly happened over here. Exactly the same thing happened over here as well. Prices dropped initially, and now they are retracing to the upside. But gold is something very important. But at the same time, what we also need to keep in mind is, with respect to gold prices, that we have arrived at a very important price level, and that price level in terms of is that support level, which runs from 1777 to 1756. This is the level where I expect gold prices to move higher, to start pulling back to the upside. So right now, I think given the fact that how good the numbers are, the stimulus check possibility is also going to be very, very low. And I think that's one of the reasons that the market hasn't really popped, because they're saying that, okay, perhaps those stimulus checks will not be coming anymore because the retail data has blown away all the expectation, because it is, like I said, it's much, much stronger, because the number has come at 5.9% against the reading of 1.1%. That really shows that the US consumers are in a very, very, very good health. They are spending big. There's probably no need for a stimulus, for further stimulus. There you go. We are seeing the positive momentum coming as we have expected it, and now the market is really going to move higher. With respect to gold prices, I know we have gone a little bit above our time, but we'll be wrapping up very shortly. In terms of gold prices, we could see bounce back, because this particular number is very, very important in terms of gold price, and we should see some sort of a support coming in. All right, let me just quickly have a look at in terms of questions, if there are any questions that I need to answer. Okay, thank you, Danish, for a Forex. We should be doing something on Forex as well, so don't worry about that. How did you navigate that page where you have highlighted the 200 and to pay attention to when looking sentiment in markets? Okay, so the sentiment in the market was very much measured by using using Bloomberg Terminal, which I have access to. It's a very, very expensive software, like £15,000 to £20,000. So you wouldn't have an access to that as a retail trader. But by you guys attending these webinars is really the opportunity for you to get all that information for free, as we've discussed. So overall, once again, our recording will be available for this particular webinar on our YouTube channel, which I've mentioned before. And thank you so much for attending, and I'll see you guys next time. BTC prediction, I think it's gonna go to 100,000, guys. 100,000. Thank you. You guys have a good day too. Bye.